All right, welcome to Talk Tickers. Today, we are diving deep into Citigroup's massive third-quarter earnings report. This was a huge release for the bank, and honestly, the market's reaction pretty much tells you everything you need to know. So what did the market think? Let's just cut right to the chase. A huge positive reaction. The stock popped over 4% right after the numbers hit the wire. The street absolutely loved what it heard. And in this explainer, we're going to unpack exactly why. So here's the punchline right up front. This was a total blowout quarter. I mean, we're talking about strength pretty much everywhere you look, really sharp strategic execution, and a clear signal from management that their big turnaround plan, yeah, it's not just on track, it's actually picking up steam. Okay, let's kick things off with those big headline numbers, the ones that really got the stock moving. It all boils down to two key metrics that Wall Street had its eyes glued on. First up, the bottom line. Adjusted earnings per share, or EPS, came in at an impressive $2.24. And then you look at the top line. Revenue hit a whopping $22.1 billion. And get this, that's up 9% from last year. So the growth engine is absolutely firing. Now, here's what's really incredible about all this, the sheer size of the beat. They didn't just squeak past expectations. They completely blew them out of the water. Beating EPS by about 34 cents and revenue by a full $1 billion, that, my friends, is what you call a statement quarter. So the big question is, where did all this outperformance come from? Let's peel back the layers and look at the business segments that really drove these impressive results. And this table tells you pretty much the whole story. Their institutional businesses were just on fire. Just look at that banking revenue. It surged an unbelievable 34%. A lot of that was fueled by a big comeback in M&A deals, plus that market volatility that frankly is Citi's bread and butter. And it wasn't just about the operations. Management also sent a huge signal of confidence to investors. How? By returning over $6 billion to shareholders in a single quarter. And here's how they did it. The lion's share, a cool $5 billion, was through aggressive share buybacks. That's $1 billion more than they even said they'd do. You know what that is? That's management screaming from the rooftops that they think their own stock is cheap. Okay, so let's zoom out for a second and connect the dots here. These numbers aren't just popping up out of nowhere. No, they're the direct result of CEO Jane Fraser's big, multi-year strategy to completely overhaul the bank. And her strategy is actually pretty straightforward. It comes down to three main pillars. First, simplify this massive, sprawling global bank. Second, use innovation to get way more efficient. And third, like we just saw, return a ton of capital to shareholders. In this quarter, they hit a home run on all three fronts. So on that simplify front, the huge news was the progress on getting out of their Banamex business in Mexico. Selling off a 25% stake is a really big deal. It takes a lot of risk off the table and paves the way for a full IPO down the road. This is a major step in untangling one of the bank's biggest complexities. And then there's innovation. You know, you hear a lot of talk about AI, but this quote from Jane Fraser really brings it home. This isn't just buzzwords, it's real. When she says they're freeing up 100,000 developer hours every single week with AI, wow, that's a massive productivity boost that goes straight to the bottom line. Okay, so a great quarter is, well, it's great. But what about what's next? The really encouraging part is that management also raised their guidance for the future, which tells you they're confident this isn't just a one-off. And you can see that confidence right here in the numbers. They've jacked up their full-year revenue forecast to over $84 billion. And on top of that, they bumped up their outlook for net interest income. That's basically the profit they make from lending. This is exactly the kind of upgrade investors were hoping for. All right, so looking ahead, here's what you need to be watching. These are the key catalysts, right? First, keep an eye on that Banamex IPO and what it means for their capital. Second, are they going to keep up this pace of buybacks? Third, can they keep the momentum going in their markets and banking divisions? And finally, we need to see more hard proof of those AI-driven savings. All right, time to put it all together. What does all this mean for the stock going forward, and what's our take before the next earnings call? Here at Talk Tickers, we always like to boil it down to one simple question. So, what's the trade? And based on everything we just saw this quarter, the story is looking a lot clearer. Our rating on Citigroup is an outperform. We think the combination of just solid execution and a really clear strategic path makes for a very compelling setup for the stock. So here's the bottom line. Our whole thesis is that the market is finally starting to believe in Citi's transformation. You know, that medium-term profitability target they have, getting to a 10 to 11% return on tangible common equity, well, now it actually looks credible. As they keep proving they can deliver, we see the stock continuing to re-rate higher, maybe even towards its tangible book value, which is sitting at over $95 a share. Now, are there risks? Of course. The main ones would be a big economic slowdown that kills deal flow, or if they somehow fumble the execution on all these simplification plans.
And as always, just a reminder, this is not financial advice.